Boom, boom, booyah. Hitting that opening bell this morning, 9:30. Start of business on Wall Street. Rang just seconds ago. Chairman of the U.S. Securities and Exchange Commission, that's Paul Atkins, gets the honor for ringing the bell this morning. The Dow is starting up this morning after being in a little sort of flattish and down yesterday. Of course, it's day one of December. Trading ended with markets snapping some 5-day win streaks. And we are now less than 30 days before the new year, so we wanted to look at where things stand and what to watch for as 2025 comes to a close. So to do that, let's bring in CBS News contributor J.D. Durkin, who's joining us from the floor of the New York Stock Exchange this morning. So, J.D., I was looking at some numbers this morning. We'd been talking about the lead up to Black Friday, Cyber Monday, et cetera, and we thought that perhaps people wouldn't be spending as much. Well, it turns out $11.8 billion in online purchases on Friday, which is a 9% increase from last year. That's according to Adobe Analytics. So really, really strong numbers there.
And Vlad, what's even more interesting to me personally about those strong numbers is we have this separation between what we call the soft data and the hard data. The soft data are things like consumer sentiment surveys from the University of Michigan and the Conference Board. They do monthly surveys of the average U.S. consumer and say, how do you feel about your personal economic situation? How do you think the next year will look like for you and your family? And in those surveys, the American consumer respondents tell us they feel pretty sour. They have a lot of concerns. And yet the hard data, which is the actual spending you just alluded to there, Vlad, tells a much different story. I think retailers, for the most part, despite the fact that we have a backdrop of a stretched consumer, they had been expecting Q4 to be very strong. And we really saw that out of those early Adobe Analytics looks for both Black Friday and Cyber Monday. The real question is, as we continue forward with the Fed taking into consideration a potential cut of interest rates next week, what does that mean for the consumer with still a few months left to go in the year? And how strong is the consumer going to be shaping up as we head into 2026?
So help me understand then, strong sales. In fact, I was looking also at like what people were spending on clothes and jewelry. I mean, in this economy, right, as we might say, people want to be out in their drip, but the markets were sluggish. What's going on?
Yeah, listen, we all want to be dripped out, of course, for the holidays. I certainly understand that. A lot of those things you just talked about are what we call discretionary spending. These are the type of publicly traded companies, the sectors of the economy you might be willing to spend a little bit more money on, a little bit of extra discretionary take-home pay if you feel better about your economic situation. But when we have economic downturns, those discretionary stocks are the very first ones to lead to the downside. So it's a fascinating study right now. We talk a lot about the so-called K-shaped economy, Vlad, the difference between the haves and the have-nots, especially in a environment where interest rates are still pretty elevated. If you're a higher income American, if you own interest accruing assets, you're doing very well. Your money is making money and you're spending that money. But if you're a borrower in this economy, you're feeling the pressure of those interest rates, and that may play itself out on a backdrop of a lot of economic uncertainty as we head into the new year.
Yeah, see what you're talking about. J.D. Durkin with some really important insight into what we're seeing on Wall Street this morning. J.D., thank you, my friend.
Thank you.